In this presentation, I am going to take you across the trend calculation using 1SD for the coming week. So coming week we'll be having expiry in the Nifty, and we have 14th to 18th. You have seen those levels, and we have also checked it that those levels worked it very nicely in the market. So from the 21st to 24th November, how the Nifty and Bank Nifty will work out as per the one standard deviation, that I am going to describe here. And before I take you across to all this presentation of how it works, what is the user's experience in these levels? So time to time I used to give you the levels. I also used to give you the follow-up emails, couple of emails, because I cannot able to go through all the email. So here Mr. Prakash is saying that he is using 1SD from the last 1 year. 17th November he has written me around now 9 o'clock evening. And he is telling that it is giving him a nice return. However, in the commodity he is getting a 50-50 chance. The reason is commodity segment we do not have the option instrument to protect. For that reason only we are not getting good return in that. So same way also uh, Mr. Krishna Kumar also has written following this 1SD method recently, and he is happy to get with this success. And these people are not our buyers. Many have written by clarifying the certain concept in that report, and what is their experience in that report they have also written. Some of the buyers also has given the feedback. Mr. Sridhar also has written me a email on November 15th. Like that way many people used to give the email, and means he is telling that Bank Nifty weekly levels fetching me good return. After I started religiously following these rules of hedging and trailing stop loss. So these things they are telling about this weekly report. So here the reports when we generate, we give you ample informations how to use this report, what is the basis of calculating this report. If you just go through the report carefully, you'll find out that this is the 60th week we are giving. 21st to 24th November is the 60th week. Out of this 56 weeks we have given you the success. And here we give that what is a 1SD formula, how the price range is calculated. This volatility what we are calculating, it is the real-time volatility. So this real-time volatility enhances the success of this method to manifold. So it is a very rigorous process is involved to calculate this real-time volatility. Once you get the real-time volatility, what is the last traded price on Friday that we are taking? We are taking the real-time volatility for 7 days. We are taking square root of 7. 1 week is classified as 7 days, and we are dividing it by 365 square root. So by this process, we are deriving a price range. So once we get this price range in our hand, we are using the Pivonic proportion ratios, retracement ratios 0.236, 0.382 till 1.618, multiplying this ratios with the price range what we have derived, post which we are just adding it with 8070 to get the upside trends. We are subtracting from 8070 last trade price to get the downside trends. So these are the things we have done on Friday post market hour, and Monday we will be following off these levels. And I have given an elaborate discussion here, trend expectation as per 1SD method, when the uptrend will give a confirmation. So above which you should get a higher targets. So all these things, range bound trend, if the price moves, oscillates between the 0.5 retracement of uptrend and downtrend, as per the Pivonic principle, we say that it is a range bound market. And if you are buying this, which strike option you should take for hedging? It is the simplest option technique I am telling. you can use any complex option strategy along with this to hedge your position. I'm just telling, if you're buying a future, just hedge it with a put option. If you're selling a future, just hedge it with a call option. So the nearest strikes I am telling you how you can trail your stop loss. Suppose you bought at 8107 and you achieve the first target, then I am telling that you just revise your stop loss to 8130, which is your 0.382 retracement level, and hold this. Once you are getting the second target, again trail it. Once you get the third target, once you are getting 0.888 retracement level here, so I am telling that just trail it to 0.786. So like this way you go on trailing, and one point of time you just decide whether to exit, or the trailing stop loss triggers, you also come out, and that time also you come out from the option position. Same way I am also giving for the Bank Nifty, same calculation. We are calculating the real-time volatility. We are taking the Bank Nifty last traded price, multiplying it, getting the price range, and in this price range again we are multiplying the Fibonacci retracement ratios to get the uptrend and downtrend price points. And here just one change I am making. Instead of taking 0.236 retracement level as a point of entry, I am taking 0.382 because the base is very high. Base price is a 5-digit number. Henceforth, the triggerings used to happen. If you buy here, quickly it triggers. Again, if you sell here, quickly it triggers. So little bit, if we give a widen our trend points, we can get a better result. So here, as per the Fibonacci principle, 0.236 sets the trend, 0.382 confirms the trend. So this is how we are just calculating the trend calculations, and I'm just telling you also hedge all these things with the weekly options, because nowadays in the Bank Nifty weekly options are available, wherein you can get a lesser premium. So weekly options you can also hedge. So not only we give this report, we used to release this report on Friday post market hour, and we sent you by email, and post that on the following week, once the trading week starts, we used to give you the follow-up email. Last week also I have given you a follow-up email, that's 16th November. This is being given. 11th we have released, and 16th I have given you a follow-up. On 15th it has opened up at what price, where we have entered the trade, and what is the net profit and loss has come. Same way for the Bank Nifty. So on this, in this particular PDF report, for trailing 3 to 4 weeks performance also you can able to see, and this we are giving you from the past 60 weeks. So, and all past 60 weeks of reading you can get it from this page. Once you visit our website, in the home page itself you can find out a link called download weekly Nifty reports. Once you come here, you can easily find out all past 60 weeks reading here. You can also click here and download the PDF file, and if you want you can save this PDF file and do a cross check that how it works. And these levels what we are giving you with a proper validation, so it doesn't have any ambiguity associated with that. Fibonacci ratios we have not altered. We have not altered any of these formulae. One is the one standard deviation formulae, is a financial formulae. It was available in the financial arithmetic, so this is not innovated by us. This formula was there. We have just what we made here, just a real-time volatility, we have brought it to derive the price range, and we have just utilized the Fibonacci principle in a different way. So that is what we have done. So, and it has given a very great success, if you can see. And if you look into these levels, what happens if you just look into these levels? Nifty last week we have calculated till 8051 was the last target for Nifty. Nifty made a low 8035 level. and settled at 8070 level. So this is the low Nifty trigger last week and settled at 8070. Bank Nifty, we have gone till 18,893, 900 you can round it. So near to that also, Bank Nifty low being created and closed at 18,970. So this close proximity of the day's low, day's high, opening, all these things validates market obliges these particular levels. So where we used to lose the trade, why we are using the technical analysis softwares, we are using lot of concepts, we are also hedging, but why the trade performance never improves? The reason is whenever the calculation methods adopted by us underperform or never perform, that time we used to lose that trade. So though you will be using lot of technical indicators, but if the technical indicator itself is lacking the efficiency, then means how you can get success. So 1SD is such a formula which we have innovated and giving you the report from the past 60 weeks. Out of these 56 weeks we have got a success. And same concept you can utilize for intraday trade, you can utilize for option trades, you can utilize for commodity. So this software also is not a very costliest stuff as it is available in market with other products. This product comes at a price of 2,750 rupees per year, which is quite affordable to most of the traders. So you can utilize this software for your benefit in many ways. And coming Monday, the 21st November 2016, morning 10 o'clock to 11 o'clock, we are going to conduct a live session in the market using 1SD, how you can do intraday trade, how you can initiate a positional trade. So this is a live session. It will be 10 o'clock when the market opens at 9:15. We'll start the session at 10 o'clock. We'll take the readings and we'll see that whatever the readings has come in that particular software for intraday basis, whether it has happened at the day end or not. So if you want to participate in this particular program, just come to our homepage, click here, trade with us in the live market, this program. So and register here. So you will be getting popped up with a registration page. Register here. You'll get a link in return and just hit the link and join. So you can also join this program using your smartphone, and you can, this is a video conference program, audio video, both the things will be transmitted from our end. So if you are interested, just visit our site. On the homepage you will find the link, click here and register.